Today is also Market Mondays. So let's review the economics of the Philippines today. So we are looking at this from tradingeconomics.com, of course, Philippines indicators. So we'll just look at the most updated one. So those with February 25 here. So beginning with stock market, these are the most important market indicators, and right off the bat, it's negative. So if we're talking about, let's look at the 1 year trend. So it comes from about 6,798. Now it's only 5,993. So we're missing the 6,000 mark. Wala na, no, we're gone to the 6,000 mark. Although last January 31, we're at 5,846. So the high was at 7,563. We almost made it beyond the 7,600 barrier. So if you look at the 5-year trend, this is the one. So that is already like a 5-year high. If it goes to 10 years, this is it. So we are already looking at the 5-year high. So the next high or next ceiling would be about 7,884, and then if we go past that, we'll go to 8,000, and then 8,322, and then of course the absolute high was at 9,000, which happened in 2018. I think this was the prior to the train law, right? So yeah, so that's where we are. So we are decreasing the market index by 8.2% since the beginning of 2025. Poor Philippines. I don't know what's going to happen because we are in election year, so more activity supposed to be this year. Okay, so here is the inflation rate. This is updated up to 2025 from 1 to 3 for the range from the last 5 months or so is from 1.9 to 2.9, which is, I think, okay. But it's not saying that our goods are already priced cheaply. It's just saying that the acceleration has gone down. So that's basically what it is. Ayun naman. So this is where we are, no? In yung 2.9 natin. And if you compare with the other countries, ang lowest dito sa comparison natin is, I think this is China. Only at 0.5%. Imagine, no? Followed by Thailand at 1.32, the red one. Singapore at 1.6. Basically, what we're saying is that the 5 countries here, we have the highest inflation rate. So interest rate, this is the basis. The Bangko Sentral ng Pilipinas, this is our monetary policy. So look at us. So the trend, let's just look at the 10-year. The trend, of course, is that if this is high, then the stock market is low, because the investors would usually go to the higher interest rate. So pag mataas ang interest rate, they would rather just save their money, invest their money in the banks, especially the ones with money. Okay, so that's the case. Then of course there's no investment. They would not invest in businesses, and therefore there will be lesser jobs available for everyone, right? So yeah, 6% is a bit high. If you look at the maximum, it's not that high compared to 2008, which was of course financial crisis, and then way before that was far worse. But if you look at 10 years and then 5 years, 5 years, 10 years, 3 years, definitely this is like the highest so far. So that's not good, of course. No? Higher interest rate would mean, di ba? Well, the market is lower. So I think dito is also telling us that we have some problems with liquidity. So they're also raising the key rates. Actually, 3 consecutive periods of rate cuts naman, you know. But then we are now still at the higher end, especially if you look at the 5-year trend. We are at least lowering down from the high of 6.5 and 5.75 na lang. But, it's still not that good. And so maybe they will continue to lower it down as liquidity improves, and also yung mga concerns over global economic uncertainties, I would say. The lending rate is of course higher kasi the interest rate is the basis. Bank's balance sheet, overall health of the banking sector, it was at a high in 2022. It has now climbed up again in the last couple of, from January 2024 to, what is this value? So this is still last year, December. This is confidence, manufacturing PMI. Manufacturing PMI used to be my bellwether of sorts. Yeah, and every time it goes down, it sends us troubles. It's like a trouble for us. So the manufacturing PMI has gone down from December of 2024 to January. But not that significant naman, no? 54, is it? To 52. But, yeah. Yun. So, it has broken the uptrend. At least this is an uptrend from July to December, but now it's gone down. And look at the forecast. The forecast is that it's still going to go down. So, that's more bad. So, we will see that I think the market will be again going further down. Vehicle sales, I think not affected. Well, this is December kasi, no? So December usually it has a higher sales rate, 10,100 units, down a bit from 10,400, but it's resilient, I would say. So let's look at the max. Yung max natin, its peak was in 2017 prior to the train law. Talagang we got affected so much by that. So yun, all in all, I think that's the main indicators here. So no good news here for us. No? So I think, except for the resilience of the banks, we are seeing that the market will, the indicator is like showing that the market has more pressures going down rather than up. But let's update with the next couple of months maybe. Like, I don't know, business confidence was last updated in December 2024. Consumer confidence, I'm sure there should be an update already. But as of now, there's nothing else. There's nothing yet. Okay, so that's it for now. Thank you very much for watching, and please give us a like, and please share this video and subscribe if you have not. Thank you very much, guys.